60% of them will fail. What's going on? According to data coming out of the Australian Bureau of Statistics, around 20% of businesses will fail in their first year. Of those who survive their first 12 months, a whopping 60% of them will fail in the first 3 years. So what's going on? Why is the failure rate of people going into business for themselves so very high? Well, this article quotes the Australian Banking Association as suggesting the following reasons as to why businesses fail. Insufficient leadership and management, inadequate market research, poor financial management, and a product and services issue. Most of this information should be considered in a business plan. So why is it that businesses are failing so easily? Surely the production of a business plan would actually reduce the failure rate. Well, estimates around the number of businesses who actually complete a business plan are colloquial. However, it is anticipated that a mere 3 to 5% of businesses actually complete a business plan before they go ahead and start. Why do businesses not complete a business plan? Well, a quick Google search will tell you absolutely nothing because nobody has done any research into this particular topic. However, I feel that businesses haven't completed a business plan for these reasons. They don't know where or how to start. They don't have time. They don't want to pay someone else to do it for them. They do it, but it's not thorough enough. They assume they don't really need to do it. And my favorite, they know everything, it's in the head, so they don't need to write it down. So how do you avoid becoming a part of these really rather alarming statistics? Well, I would say starting with a business plan really couldn't hurt. If nothing else, it will show you where you have holes in your skill set that you either need to find some training or some mentorship or professional help to help fill the gap with. What if you're not a startup? Is it too late to do a business plan? No. Really, they should be prepared every few years or so. So if you've managed to get through your first few years without having one, doing one now is neither going to be a bad idea nor difficult. A good business plan will cover off on these areas: the proposed business, the market it will operate in, what the future goals and plans are, and how it's going to be funded. In this section of the business plan, you're going to take a detailed look of the basics of the business. So this would include things like its name, the form it's going to take, so whether it's going to be a sole trader, a company, a partnership, or a trust. If you want more information on this, I've actually done a video on the different business structures available to people in Australia. I will leave a link in the description box below for you to watch it after this video. What registrations it needs to be able to operate, and whether or not it will need a physical presence such as an office or a retail shop, whether it will be mobile or virtual. Once all of this has been outlined, more information around the ownership structure should be included. So for example, if it's a company, are you going to hold all of the shares in the company, or will another entity hold it for you on your behalf? It will outline who will be managing the day-to-day operations of the business and what their skill sets are, and it will ideally provide a visual of the overall structure of the business. As well as all of this, the owners of the business will be listed and their respective percentage shareholding or ownership percentage will be included. Next, we're going to identify the types of insurances that are needed. Now, this will vary depending on whether the business is virtual, physical, whether it has staff, what industry it operates in, whether or not it needs to carry public liability, and well, you get the idea. Now we've covered off on the basics, we get to the fun and interesting part. We need to take a look at the risks that pose a threat to the business. This is where I tend to look at the high-level risks that pose a threat to the business. So for example, loss of clients, finding new work, lack of brand awareness, and competition from other businesses. These risks need to be considered on a how likely and impact basis and then ranked high, medium, or low. The next part is key. For each risk, you need to identify at least 3 strategies on what you are going to do to mitigate that risk and lessen its impact. Brief mention should be made as to the legal framework within which the business is going to operate. So for example, the Income Tax Act, the Corporations Act, basically any legislation that's going to govern the way that your business operates, how it delivers its product, and how it manages its staff. If you're going to be across dual locations, you need to consider the legal framework you're operating in each individual location. The topic for the next section is around operations. How will the business operate on a day-to-day basis? Who will be working in it day-to-day? What software is needed? What trading hours will it do? What warranties are provided and what quality control, and so on. The next section that we need to address is what market the business will be operating in and what it looks like. So for example, is the business an accounting business operating in Perth, Western Australia, focusing on individual clients and small businesses? Or is it a cleaning business located in Coburn, focusing on residential homeowners? Or perhaps it's a martial arts business located in O'Connor teaching martial arts to children and young adults. This is one step back from creating an avatar of your ideal client. Instead, we're looking at the overall business and what it looks like. The key thing here is to be specific. The more specific you are, the easier everything else becomes. Once you have identified your market, you need to look at your key financial goals over the next 5 years and where that revenue is going to come from. For example, is it going to come from referrals, the internet, advertising, existing clients, and so on? Be honest, account for those you think you will lose. For example, in the accounting industry, we tend to work on a 10% loss of client basis every year. Once you have done all of that, you need to have a look at the locality that you're locating your business in and what the opportunities and the weaknesses of that locality might be. Looking at things like the growth and any risk areas. Again, if you are multi-geographical, you need to make sure that you are looking at the locality that you have chosen to operate out of in each geographical location. Next, we move on to clients. Now, this is where you get to create your avatar of your ideal client, and you also need to look at your existing clients and see how they compare to your avatar. Knowing exactly who your potential clients are will help you focus your marketing efforts and ultimately be more successful. You also need to outline how you are going to look after your clients. What types of services will you be providing? What type of experience will they have? What will you do if it all goes south? Next, we step back into the analysis side of things and we take a look at the strengths, weaknesses, opportunities, and threats of the business. Or, in accounting speak, a SWOT analysis. Really, you should be looking to identify as many items in each category as possible. We are not necessarily looking for solutions at this stage, we are just looking to identify the items. Next, we look at what kind of advertising and marketing we need to do. Now, some business plans include a full-blown marketing plan and strategy, but this is not something that you necessarily need to do. However, at a minimum, you need to be including an overall plan and strategy of what you intend to do in terms of marketing. This might be things like flyer drops, YouTube videos, Instagram followers, and so on. It's also best at this stage to provide an estimate of the costs that you think you will incur in undertaking this strategy. This will show the people reading this plan how much you're intending to spend on marketing. Next, we look at finances. How do you propose to fund the initial setup of the business? Is it going to be through a loan, investment, savings? How much do you need to start up? What financial goals do you have, and how is that going to increase over the next 5 years? When do you actually intend to start making a profit, and how are you going to fund the business until you do? And how much will you personally be liable for? Again, the key here is detail. So it's a great idea to include a cash flow and profit and loss statement for the next 5 years, showing where you think the funds are going to come from and the expenses that you think you are going to need to spend over that time frame. Outlining the key assumptions here is also a really good idea. Remember, this document is likely to be provided to financial and other institutions to help you fund your investment. So it's a really good idea to be as detailed as possible. This does two things. Firstly, it provides them asking you too many questions because you've already given them the detail they need that answers all of their questions. Secondly, it demonstrates how knowledgeable you are, how considered you've been, and that you have actually considered all the risks and benefits of everything to do with starting up this business. If it feels like a lot of work, it is. But taking the time to create a business plan might just take you from being one of the 20% who fail to one of the 40% who actually succeed. Best of luck, and I'll catch you in the next one.